This is Justin Pulitzer. This is my weekend review video for Sunday, July 19th, 2015. Pretty good amount of stuff to cover, and I'll just dive in. So we had a lot of stuff go on this week, particularly the Fed. I had mentioned that in my Periscope from the other day, and I had discussed that Janet Yellen for the first time had acknowledged that we may be seeing structural unemployment as opposed to cyclical unemployment. And if that is the case, we're probably going to see interest rates being low for quite an extended period of time. And I jokingly had said that I'll be changing my hashtag from lower for longer to lower for life. So we'll see how that plays out. The inflation data is really not there, at least in terms of what the Fed looks at. You've had energy prices lower, you've had commodity prices lower, and you have interest rates lower. So all signs are pointing to lower for longer. Anyway, let's talk about SPY. So SPY here, I had discussed this regression line. We clearly got above it this week, and we are now coming back to challenge the downtrend line of these slightly lower highs. We did, however, here make lower lows, and I had pointed out that we might be due for a bounce. I discussed in last week's video that these lows here, I really had been looking for the market to come back down maybe a little bit lower to fill this gap and potentially test the trend line. But I had said that we were seeing some higher lows here, and then we took off. So the market is sort of getting to be a decision time here. I was looking in the SPY options, the high open interests. If there is some type of a pullback, the 209s and 210s have a lot of open interest. So I would think that if it is going to roll over, it would be something like this. The IV is really low, and the expected move for this week is really small, only 2.2. So if there is a down move, that IV might spike considerably. I'm going to discuss VIX in a minute. It did something a little bit interesting this week. So if we do move up and we do wind up punching through, the 214 through 213.5, 214 area has a lot of open interest in with regard to the calls. So that might, and these old highs might serve as some resistance considering how far and how fast we've come up. It would be a really multi-day rally of 1, 2, 3, 4, 5, 6, and that would be like day 7 or 8 of a rally. So it might be coming up here. It could set up for an interesting right or right out type of a short trade. If there is a rollover here, you could do some type of put ratio with this being your, long strike and something below, maybe down near this gap fill, the 207s, which also has a ginormous open interest, being your lower strike. So like 1 times the 210s, 2 times the 207s. That to me, with expiring this week, would be an interesting and a trade setup that I would be interested in taking. IWM was a little bit weaker. You can see the S&P was making highs. The Qs we're going to talk about in a little bit, but the IWM was actually down weak on Friday, and this day here, this Thursday, is a bit of a reversal bar. For those that are aggressive, 126.74, this high of day, this quote-unquote more secure high, could be a good stop if you want to play for right or right out short for some type of further rollover, maybe down to some of these Fibonacci retracement levels, i.e. maybe the 61.8. Again, put ratios or even put spreads could work with that. We did here, however, bounce. We bounced ahead of schedule above the 120.97. That's been my theme for a while this year, that we don't get the full retracement to launch from the more solid anchor, and these rallies aren't necessarily as strong because they don't sort of ground themselves well. I had mentioned them in the Periscope that I analogize it to a slingshot. If you pull the slingshot and it's only sort of, this to me was close enough, but if you pull a slingshot back halfway and then you let go, the resulting distance of the move is a lot less than if you cock the slingshot back all of the way. So just keep that in mind when you get these rallies off of lows that are sort of ahead of schedule. So it's kind of hard to say that you're in a bear market or that the market isn't bullish when you have the NASDAQ doing this type of action. It clearly, here we started to make lower lows. I had discussed, though, in many videos over many weeks, that between 106 and 104s was a lot of support, and it would be not so easy to break there, and clearly it wasn't. And we are now up to new all-time highs. If NASDAQ, and again, I want to note, you're on 1, 2, 3, 4, 5, 6 days of rally straight up in a line. This is getting to be a little bit unsustainable, breakneck speed. If there is some type of another move, like a big move up, that would be a great opportunity to either take some profits or maybe test some shorts into. If we do wind up rolling back over into range, maybe it would see the range breakout. Obviously the 111s would be the first sort of reference point. I know a lot of people and all of the talking head TV technicians will say if you violate this, the market is rolling over and it's bearish. That is horse hockey. The ability to come back down to the middle of the range, which would roughly be 109s, to me would be that's a pretty big move from here, obviously. But you can now have a pullback, believe it or not, into 109s and the market still be healthy. It is very typical for a market to break out, either retest to the breakout point or even to mid-range of the breakout point. Obviously, if it holds up here, that would be more bullish than if it came back down here. One of the big reasons for this rally in the NASDAQ is clearly Google. Wow, this is like a 3 or 4 standard deviation move. I have to see where the interest was. You can see Google had been a laggard for a while. It was sort of building a base. It rallied about $50 or so ahead of the print and then rallied another $100 to take out the old highs and it took out the channel, took out the old highs. I think that Google is likely going to be sideways to higher. For me, I would like to see Google have some type of inside action here for the next few days, and then you can use this high of day, this 703, as a reference point for maybe even still higher. However, I will caution, if you're long Google, look where we got to, the 1.618 fib extension. So this is probably a good idea to take some profits here if you've been long for a little bit. I would say that there could be some type of rollover. I don't know how much there would be. I kind of have to see where this stops, and then obviously we would draw some type of Fibonacci retracement from down here. Let's see if we can do that. Fibonacci retracements. You could do something like this, and then the gap fill here would be the 61.8 down at 600. I don't know if you're going to get a $100 decline, but what you might want to do into weakness is sell some puts that are maybe $100 out of the money. As it comes down, maybe it retraces, a little bit less than that. But that's kind of what I'm thinking with Google. The big Megillah that's coming up this week is Apple. Now, Apple here stopped just shy of the 200-day moving average, and it sort of had a little bit of a look below the breakout range and rallied back up hard. It would have actually been better for Apple if it would have came back deeper into this range here, maybe to one of the Fibonacci retracements like 114, 115, and then launched, just to really have shaken out some of the weak hands. Here, look at this. You broke the channel. You had a failure kind of trying to get back to the channel, and then this washout bar, another washout bar I think would have gotten out all these weak hand chasers, all the holder-ons, and then would have set up for a more solid launch point. But that being said, we did hold the breakout point. It is rallying back up. Again, 1, 2, 3, 4, 5, 6 days of rally into a not-so-steep downtrend line and sort of like a breakdown area. This 129.85 is really key. I still think it's possible that Apple could have a shake and bake. I believe they report on Tuesday, and the expected move is like $5.81 on the snap, and then $6.51 into the expiration. So roughly about $6 or so next week. So that would obviously take you close up to and maybe even above the old all-time highs. I think Apple can do it. The pattern has been with these stocks, crazily, in Google and in Netflix, is that they run into the number and then they run some more. So until that pattern breaks, I don't see why there is reason to fight it. However, I would love to see if Monday or Tuesday before the print there is some type of pullback, that would to me set up as a great writer. You can't really say write or write out because it's it's going to gap on the earnings, but it would be great if Apple had some weakness ahead to kind of shake out these weak hand chasers and set up for the classic shake and bake. Like, look here, you rallied off the channel low, had this shake and bake here, the shake and then the bake here. So that to me would be another great ideal setup. I believe it's done that the last couple of earnings. Not so much. This sort of rallied up into the earnings, and then the problem is it gapped, and then everyone had been playing long, and it sold off. So I would like, personally, if I had my druthers, I would like to see this sell off a bit and set up maybe even down to somewhere between the 127s and the 125s. And then that would set up, you could kind of set up for an inverse head and shoulders, this being the left shoulder, this being the right. You see the left, the head, the right, and then, launch to get back to the old all-time highs. The implied volatility in Apple is sort of creeping up a little bit. Down here it was really high, then it came off a bit, but now we're starting to build in some premium for earnings. If you want to hedge, it might be a good idea to sell some upside calls. Or if you want to go out a little bit into August, the IV was a little bit cheaper. The other day it was in the 25s. I think it creeped up, though. There's some that are, I think, still in the 26s. Maybe buy some put spreads or do some put ratios, more near-dated to benefit from the high IV. You could even sell some near-dated puts and buy some long-dated puts, so kind of sell what's expensive, buy what's cheap, or even the same thing in the reverse with calls. Sell some near-dated calls that are cheap and buy some long-dated ones. Sell some near-dated ones that are expensive and buy some long-dated ones that are cheap. I haven't come up with what I want to do for Apple earnings yet with the strikes, just because we still have another couple of days, and maybe it does something like get really crazy up into the old all-time highs in a straight move, and then maybe even set up for short. So I want to just see how that plays out. Facebook was a huge beneficiary of the move in Apple. In Google. The Facebook, believe it or not, is actually their metrics in terms of their top line revenue growth. The accelerated revenue growth is faster than Google. They've also been monetizing, and I believe that when Snapchat comes public, it's going to show just how cheap this, quote unquote cheap, this Facebook is. You can see it was in a consolidation channel. It is now well above there. I've been saying that I think Facebook gets to 100. The 1.618 Fibonacci extension of this range here brought you up to the 9180, and I don't have a full 1.618. I'll talk about that a little bit as we get closer to their earnings, which is the 29th, so we have some time to go. But I would say that as we are getting a little bit higher, as we get closer into that 100 area, you might want to look to book a little bit of profits in the Facebook, particularly if it happens ahead of the print, given that it's all-time highs and it's starting to get a little bit steep. I do love this sort of like cup and handle pattern we formed here. We ran up hard, didn't pull back. We pulled back, retested to the breakout point, and then just launched. This is kind of textbook classic bullish pattern. Still bullish on Facebook. The opposite of bullish is this Twitter. Really just choppy coming into earnings. We know that they have declining user growth. I think the big fear is that it may even go negative for the first time. I've been saying this for a while. This low here should be quote-unquote secure. Here you had a false buyout rumor. I believe this is going to be a binary trade, that this stock is either going to be $45 up here to kind of fill in to the breakdown here, or it's going to be a $29 or even lower stock to retest the all-time low. So I believe it's a binary trade. Sort of flip a coin whichever way you think. This has done a lot of time in purgatory here, consolidating. I would probably say that I believe at some point the stock will be back up to $45. I don't know the order of operations as if we go there first or if we go down lower first. So if you're long, you probably want to hedge a little bit or just not be super duper huge into it. If you're playing short, just this spike high here, I would say is your this 38.82 is probably your stop at this point. So that is Twitter. Let's go back into macro mode for 1 sec. I want to just talk about the VIX and the TLT and also gold. So let's do VIX first. VIX here, I had showed you that we held the 200-day moving average here. We're making higher highs up into this 20 region, and absolutely collapsed here this week on, I believe, the sort of dovish more news of the Fed. Also, of course, the Greek deal. There was a lot of capitulation in terms of the Greek, and also a bit of a bounce in China. We did something very interesting here on Friday. We made a new low, so we are starting to now make higher highs and higher lows. The key to that is this 1153, so I would say VIX is, believe it or not, poised for some type of a bounce. In 2007, the low was in the 9s, so that'll give you an idea. It is possible that VIX does get down into those 9s if we do get the blow off top like I've been waiting for, sort of like we're seeing in NASDAQ. Maybe if Apple is bullish on Tuesday, you get something like this. Like you get a big body candle up here, and that's sort of the blow off top that we've all been waiting for, and that would signal, obviously that would probably bring the VIX significantly lower, and that might be an opportunity to kind of get short the market for some type of a pullback on some type of a parabolic move higher. So VIX, I would say that the IV is getting too cheap here. We're near reference lows. You probably want to be now more of a buyer than a seller of premium. TLT. All this tough talk of the Fed raising interest rates, and all this did was hold. This made a higher low than here, and this made here a higher low than here. So technically this low here, it's not really elongated enough. I would have liked to have seen this lower, this like a bit of a bigger tail for kind of a secure low, but 1488 is sort of your bogey to play long against or to short against. If there's some type of a breakdown of this range, I am going to have to revisit my lower for longer thesis, and it might just be, we might actually get the interest rate rise. I would say that there would be a little bit of room in this thesis down to the channel low. I kind of was looking for the 113s. We never got there. The next stop would be the 111s. So this area here, if we break here, it could be a short down to that area. However, the other scenario, all this, like I said, all this tough talk from Yellen, right? Of maybe raising interest rates, and interest rates did nothing but go lower, and TLT rallied. That's also why the market has been holding strong. I don't care what any of these TV talking jackwagons say. They don't understand the relationship between interest rates and the stock market. Stocks are discounted. They use something called a discounted cash flow model. And interest rates, the risk-free rate of treasuries, is a very key component in that. And the lower interest rates are, the more bullish that is for stocks. This is why the market is at all-time highs, because interest rates are at all-time lows. So this is still considered low. There could be a rally up to the channel low. I would say this would be an absolute amazing opportunity for right or right out short. It's the 2009 crash peak high, about 123.15. It's also the roughly around the 50% retracement of this entire. I actually have to readjust the my fibs because had been drawn in for here. It wasn't drawn in here. I'll do that a little bit later, but you could see this is really where the breakdown point was here, about this 123, let's call it. So maybe up in here we could set up for a right or right out type of a short. If this breaks here and we do go higher like this, then I think there's going to be talk of recession, and you might want to be just a little bit cautious near term with stocks, because that would get people a little bit scarier. Interest rates lower. I know that's a bit of a contradiction in terms of what I said. Lower rates means a higher stock market. It doesn't necessarily mean that on the snap. It would translate to that longer term, but there could be a little bit of fear if this comes up to fill in this gap into the 127s. There'll probably be a lot of recession talk, and that might be a little bit waning on stocks. GLD had a breakdown here. You can see we took out these lows, and it was on some increasing volume. One of the things that I'm looking for here, because I discussed this on, I just want to show you this first quickly here, and we're going to come back in a sec. You can see we made a lower low here, but in SLV, silver, which is sort of the levered play in the metals, we didn't make a new low. You can see we were weak. We did come down and test into this sort of capitulatory hammer low, into the tail, but we didn't make new lows with gold, and I took a bit of a long here. It's sort of a right or right out play versus this hammer low, the the 1403, believe it or not, if this breaks, the 100% retracement from like going all the way back is like getting cut in half to $7. So you don't want to be involved in that if this breaks. This is, like I said, just a tester low against this 1403. Maybe I would give it to 14, on some type of a little bit of an overshoot for a double bottom. I would add over the high of day of that bar, which was 1458, for some type of a move higher, maybe to one of these fib retracements, maybe the 1550, which was sort of the breakdown, really the breakdown here. We rallied from there and then kind of couldn't get back over, and then it collapsed. So I think between 1550 and 1584, this area will be some significant resistance. You can see it's very large volume nodes, and that area to me would be actually a good right or right out short, but also a place to sell if this does wind up getting that rally. So one of the things I'd be looking for in gold is to maybe there's a day, or maybe there's another two. Sometimes this can be 2 days, but maybe this sets up to be some type of an island reversal where on Monday, or maybe it's down Monday and then Tuesday it gaps. But this could be a gap, and then this would probably signal a bottom for quite some time. Gold could continue lower. I've been really looking for the major breakout area to kind of buy gold. I'm just going to go extreme here for a moment. Let's see, can we get back here? It's even longer than that. We need to go back I think 10 or 20 years. Let's just do 20 for argument's sake. Yeah, you can see this 144 was the high before the financial crisis. This is also the this to me would be, it would also had been resistance for a while. That's roughly like 1,000. So maybe if there's like a last leg down in gold, I'd be interested in kind of buying the dip here for right or right out type of play. But maybe we don't get down there. I know a lot of people have been talking about it. Maybe this could set up for that. But like I said, I'm not long gold. Not yet anyway, but I am long a little silver versus this low. So that is how I'm playing it. FXI got a bit of a bounce. This is the China ETF. I think that there is some room maybe to some of these Fibonacci retracements. This was such a big bullish market. I would think that at least gets to the 38.2 and maybe to the 50% fib, which is the primary downtrend line. Excuse me. I had sold some puts in here, and they are all off now. This rally came up. I had taken them off, I believe, over here. They just got like absolutely smashed, and the risk reward wasn't really good. I actually was thinking about selling them on this day. I was a little frustrated that China didn't hit the exact 61.8. I was a little nervous that I missed the rally, but she didn't disappoint. Actually, take a look at this. This here would be an example of an island reversal. I mean, this is just gaps. So, it trades based on a forward market, so it's going to trade in these gaps and, look ADR-ish. It's not going to look like a confluence. There's not going to be a continuous move like there is in stocks. But this here would be an example of an island reversal if this was a normal thing. You come down, you have this gap lower, and then the next day is a gap higher. So that, to me, would be the sort of, think back, if you see that in any of the metals. BABA, I've been discussing a long since here. This stock just never makes it easy, right? It is just an absolute debacle. It came down to like close to these reference lows here. It actually overshot them a little. This day here was the day that I had shown you with the FXI making the new low below. That was actually the low, but BABA didn't confirm with a lower low, and it's just rallied since. So BABA here made a slightly higher high. I would say that you could even constitute these as almost equal double bottoms, and it is now trying to rally. It's sort of breaking a downtrend line, and it's now making a higher high on a leg off of a higher low. Look at this. Low, high, higher high. That to me is, I don't want to say that it's promising because this stock has just been a complete debacle, but there could be some room up. Maybe it does get back to these like 86, maybe 85, 86, and potentially even to that 89, 90 if there is some type of a move higher. This is sort of where this gap was. So maybe there's some type of a rally before the number, or maybe if China gets its legs a little, there could be some more follow through in BABA. One thing before we go to BIDU. if BABA takes out this swing low here, this 80.21, so like roughly 80, just GTFO, because it's probably going to retest these lows, and I don't know how they're going to hold again. So that is sort of the caveat. 80-ish has to hold. BIDU, not really one I like that much, although here we made a lower low, also now starting to make higher highs off of a higher low, so maybe the pattern is shifting a little bit. I would be liking to see this come back up to the primary, sort of the old channel high, the old channel low, which would coincide with the gap fill and maybe these highs as a right or right out type of a short. It's also sort of where the volume distribution is, particularly if it happens in a steep, sharp, fat manner. We're going to see what happens with earnings. I'm likely not going to be involved in this thing before earnings, though. Amazon, bullish, discussed this, said over this high, the 439, which was the range high, it was going to potentially see the channel high. We are now kissing up there, so this is probably not the spot to first initiate your long in Amazon if you weren't long here. So you might want to be looking to take some profits. I'd also got up to that 1.618 fib extension I had been talking about, the 484.73. We got into there. So let's declare a little victory, book some profits in Amazon. That's not to say this thing can't go parabolic and pull a Google and go full on, bullish, but this is definitely a spot, given the setup and the technicals, probably to book a little bit of profits. Chipotle, not one I cover very often. This is actually a stock I have had very mixed results with in the past, most of which have not been so positive, although the ones that are very positive, and the ones that aren't. I had done a strangle on this thing once a while back, and it kind of strangled me with an outsized move, so I kind of don't play this thing around earnings. However, this was the old channel high, the low. We broke down here. We are now retesting, and it is also testing the primary downtrend line here. So this is a really key juncture here for Chipotle. If it does go higher, I would say the gap fill here is sort of a fait accompli given, and likely up to the old all-time highs and probably new highs, and I will discuss that in terms of Fibonacci extension. That is the most likely scenario, believe it or not, as crazy as it sounds. But if you're long and you've been long from here, we didn't get the full gap fill. Again, this really frustrates me. I was looking for the channel low and the gap fill to get long, and instead it decided it had other ideas to rally ahead of the stronger support. Think about it, slingshot, not necessarily fully cocked. So either we are going to go up to the all-time high here, or we're probably going to roll over here once more. So I'm really going to wait and see how this goes with Chipotle. If they gap and it's strong on earnings, it's probably going to be a play for continuation higher. If it's disappointment here, it will be a continuation, in my opinion, for lower. So that's what I'm thinking with Chipotle. It's going to be kind of the second mouse gets the cheese and doesn't get the neck broken. FireEye has sort of sat out the rally here. Some of these stocks, like the Palo Altos and the FireEyes, looking a little bit softer this week. I would love to see this just consolidate a little bit ahead of earnings and then maybe set up for some type of a right or right out trade. I would even, believe it or not, like to see this thing have some type of a washout before earnings to set up for a long. I believe that these stocks, the cyber security stocks, have the wind at their back, so to speak, in terms of the headlines and the news. There is not going to be less hacking. There is probably going to be significantly more. Palo Alto. This one did get a little bit stronger, actually. It also is sort of up to the channel high. It was said here that I thought this breakout here was bullish. However, you're in multi-days of rally. You might want to book a little bit of profits in this, particularly on strength. I do think longer term higher, shorter term cautious. This really just pisses me off. Again, another one that kind of rallied ahead of time. Look at this, perfect 50-day moving average. Trend line touches with slight intraday overshoots. So close here. I was waiting, and unfortunately did not get the 50-day moving average fill that I wanted, but it did rally ahead of time. Stock still bullish. 50-day moving average is the bogey to buy on dips. If that ever breaks, then you can play for short for maybe the primary trend, which would be significantly lower. God willing, we could get a pullback in these stocks to kind of load the boat. JetBlue, I've been long for a while. Stock's making new all-time highs. Not really too much to dislike. I do believe the stock will get close to 25. That's the 1.618 Fibonacci extension of this range. It'll probably grind there. Maybe it gets there into earnings. I'm long some call spreads, and we'll be looking to take some profits on rallies. Netflix, holy cow. Again, it did it again, right? I had discussed that my strategy for this wound up being right before it was wrong, although it wasn't really wrong. I had been discussing being long this stock into the split. That plan worked. It was profit-taking time, in my opinion. There was also a late Goldman Sachs upgrade here, right before an earnings report, right before a split, kind of get everyone in my opinion. It did pull back here, so you did save yourself a couple of points. However, look at this. I mean, the stock, they missed a little bit on their revenues slightly. Their earnings were kind of okay. The user metrics, though, however, were phenomenal. It was a blowout. Stock went higher. It did it on a little weaker, on kind of declining momentum here, but maybe it's kind of got its mojo back. Really hard pressed for me the stock probably will still go higher. I mean, that's just how this stock is, right? That's how it rolls. It just goes higher and higher, but I do believe that there will be a pullback, in this stock at some point, and that will be sort of the one to buy, particularly if it's coming off all-time highs. Maybe there's some type of a pullback to mid-range here, and then that could set up for, maybe some selling some out-of-the-money puts or what have you. Hard chase here, but if you're long, I guess stick with it. You have your reference low here. I don't know if I'd use the body. I'd be a little bit cautious if we started taking the body of this day out here around these 111s, but you definitely want to kind of be careful if you lose the 107.68. So if you've been long for a while, and you're willing to risk that many points, that's your stop. Or you could just kind of trail it along based on, prior days. Netflix, though, pretty bullish. Tesla. I've been bullish on this stock for a while. I've been saying that I think it's going to retest the old all-time highs up here around the 291s, and then eventually we will be talking about Fibonacci extensions on this stock up around 321 and 359. I don't know if we get it on this earnings. We'll have to see, but they also are ones with the news cycle at their backs. They are going to have the Model X coming out. This Powerwall seems to be doing well. There's some various other things, initiatives, and of course there's the Elon Musk factor. If there's a pullback in this, I would be looking to play by the dip. However, if you're kind of like short-term, late to the party, you need this stock to hold over 265. This was the old highs from, let's see if I could show you this quickly. 2 years daily, that ought to be enough. Yeah, this was the old high here before this sort of head and shoulders blow off. Here, so you need to really be above the 265 to be in the upper distribution of prices for still higher. Below there gets a little bit more iffy, so just be a little bit careful if you're long. I'm going to end on Take-Two Interactive. This is one I had been bullish on. I had actually got in, I believe it or not, I got in mid-range here, somewhere in here. I forget what the exact price was. This is sort of was. It was sort of the real true long point would have been over the 28.72 to buy this for the extension, but I sort of just had a feeling with it, and I figured if I bought mid range here, I'd be stopped out, a buck or so lower. It really wasn't that big a deal. So anyway, it worked out. I'm long. However, this is 1, 2, 3, 4, 5, 6, 7 days of a rally back to an old all-time high on a big bar straight up vertical. So on Friday I booked my profits. I do have a smidge teaser on for the 1.618 fib extension up to 35s, which I do think is very possible. However, 3080 to 31 has to hold. Anything below there could be a pullback to retest sort of the breakout area, and then you could kind of play it row from there. Anyhow, if you're not following me, my Twitter handle is @JustinPulitzer. Be sure to follow me. Please hit the like button below. It's that little thumbs up if you found this video useful. Comments are always welcome. It helps me make my videos better. And be sure to hit the subscribe button. That way you'll get the immediate notification when I post new weekend update videos, as well as my Periscope rebroadcasts. So I'll leave you with that. Let's have a great week, and cheers.